Hello, everybody. I'm going to do case five. Now, some of these cases, I apologize for, have the dates all over the place. This is what happens when you don't do a thorough job when you find and replace or try to update things over time. So, the first company is Brick, BRC, and really this should match the information provided here. It really is supposed to be 2009 and 2010. What you got here, 2009, 2010, 2009, 2010. So there's two 2010s because they're alternate scenarios. What we're trying to reflect on in this problem is how to go from to 123109 to one of these scenarios. So the first one we're going to look at is scenario one. And it's just asking us, well, what happened, right? It gives us a few ground rules. It had zero net income, no new sales of common stock, and paid no cash dividends. So, what is this referencing us to? What is it pointing us to? Well, of course, net income would affect retained earnings. Cash dividends would affect retained earnings. If it had zero net income, then this swing from 1 million to 850 would have had to happen through an alternate path. All right, so different things can reduce retained earnings. When we reissue treasury shares at a price that's below our repurchase price, that can debit retained earnings because we're obviously looking for, in this case, a retained earnings transaction that would have forced my retained earnings amount to go from 1 million down to $850,000, right? So we're looking for something on this side. We know we have no net income and no cash dividends. So the 150 must have come from a source other than a cash dividend or a net loss. And we need more, right? Because we know that retained earnings drop, but we need something to provided that drop. Now, if I look at what happened to common stock, right? Common stock went up and I had an increase in common stock by 150,000, right? And that perfectly mirrors the amount I'm trying to look for here. So these two things must be connected to each other since we had no other movement in any other equity accounts. And in that case, if my common stock went up, it must have been credited. And if my retained earnings went down, it must have been debited. When we have right now a kind of an open shut case as to what this might be. What is a dividend that we know of that affects retained earnings exactly as much as it affects common stock? This must be a large stock dividend. Because remember, large stock dividends are made at par value. So not just a large stock dividend, but we can actually calculate the percent of the large stock dividend. It was 150,000 shares. And we know that because common stock went up by 150,000 and the par value is $1. So that total transaction of 150,000 divided by the $1 par tells us the number of shares. And these are the newly issued through dividend. So by that stock dividend, notice it said cash dividends. It didn't say anything about stock dividends, right? And that would be approximately a 30%, not approximately, exactly, a 30% stock dividend. If I have 150K shares going out, I had 500K shares, then that gives me zero point 0.3 or 30%. So that's the first scenario. The second scenario, okay, again, assume no new sales of common stock. So we didn't issue it for cash. They pay no cash dividends, so we rule that out. Based on this information and that provided in the financial statements, what do you think BRC's net income was? Ignore tax effects. All right. So this time, I relaxed the restriction of zero net income. Let's look at what happened between the end of the year 2009, the end of the year 2010. So for scenario two, I had an increase in common stock by 25,000. I had an increase in APIC by 500,000. And my retained earnings dropped by 400,000. Okay. So if we didn't have any newly issued stock, but these two accounts moved, common stock and APIC, then that follows the same entry template that we know is true for a small stock dividend. So in scenario two, we know that a small stock dividend must have occurred. So we had one declared and paid. The shares had been issued. And when we record that transaction, we would credit common stock and APIC common stock for 25 and 500 respectively. That will push them in the direction that we noted, increasing them both from 500 to 525 and to 2.5 million to 3 million respectively with this entry. If this is our small stock dividend, then we debit retained earnings for the total of those two, which is 525,000. Okay. But the question was, what about net income? Well, that has to do with the fact that, hey, my retained earnings dropped 400,000. So let's look at the retained earnings account and break that out. I have retained earnings. It started at 1 million according to my problem. And there was a small stock dividend paid for 525,000. And we end up with retained earnings of 600,000. And we know this doesn't work. We know that there were no other cash dividends paid, so nothing can really happen here now. And if we just took a million and reduced it by 525,000, that would give me 475, which isn't this. In order to get to that, I would have had to increased my retained earnings account by 125,000 through some means, right? In this case, this is my net income. And that's what we were looking for. A little bit more information of this that we could come out with. Since we know that the par value is $1, we know that the small stock dividend resulted in 25,000 newly issued shares. And we can verify that it was appropriately a small stock dividend by taking 25,000, dividing it by 500,000, and that gives me a 5% increase in shares, which is the threshold for underneath the threshold of what we would consider a large stock dividend. Right? So that is case number 5. Okay. I'm just going to break these out into a video each.